Is it hard for you to choose what stocks to buy? I mean, honestly, there's like Apple, Nvidia, Amazon, Microsoft. There's so many companies out there. It's really difficult to make the decision on what to buy. And if you're like this, you're not alone. I mean, most people, honestly, they just buy whatever they get recommended and they don't even know much about the actual company. I got a video suggestion on the basics of investing, so we could go through, do a couple quizzes, and we'll see if you could just get the basics, honestly. Now, basic investing really is honestly just putting money into something and hoping that it brings you some kind of return. I mean, other than that, what's the point of investing even? I mean, seriously, anybody can grow their wealth. Like, you can put in money into index funds, you can start a retirement account, and chances are you're going to end up in the plus eventually. And if that's all you do, honestly, you're probably just going to get average returns just like everybody else. But a smart investor, they're actually going to run numbers, they're going to do research, they're going to figure out which companies and what investments to get into so that they can maximize their returns. And they won't be average. Now let's just have a quick quiz. Let's see where you stand on this. Okay, let's just say that you have unlimited money, right? You have an option to buy one of two cars. Let's say you have a Lamborghini and the other one is a Honda Civic. I mean, you can tell which one's more valuable right now, right? You don't really know the prices, but you know which one's more expensive. So let's just put an approximate intrinsic value on it. Let's just say the Lamborghini is 800 grand and the Honda Civic is $5,000. Now the real curveball is seeing what it's actually selling for. Not its intrinsic value, but what it's selling for. Now let's just say the Lamborghini is selling for $1 million. Its intrinsic value is 800,000, but it's selling for $1 million. Now let's look at the Honda Civic. The Honda Civic is selling for 2,500, but the intrinsic value is $5,000. And for the sake of this example, let's just say they're both like base models, no issues with them, everything's perfect, everything's the same. Which one are you going to buy, the Lamborghini or the Honda Civic? You have unlimited money, but which one will actually bring you more value? Well, the Lamborghini is going to be an instant 20% loss. You buy it for $1 million, it's actually worth 800,000. You just lost 200 grand on that. It might be the coolest car and like the most expensive, but still, you're losing value on this purchase. But the Honda Civic, it might not look pretty, but guess what? That's an 100% gain right there and then. You might not get that gain by selling it instantly, but you know that its intrinsic value is twice what it's selling for. Figuring something like this out when buyers and sellers are focusing on all kinds of different things, which in this case maybe it's the Lamborghinis, could put you at an upper hand in getting better returns on your investments. Now let's kick it up a notch. Let's do something that's a little bit closer to actual companies. Let's just say money printers, because like basically all companies are basically money printers. So let's just say you have two options again. You have one that's making you $30 a day. The second one is making you $20 a day. Obviously you would choose the one that's making 30 bucks a day, right? We don't know how much they cost or anything, but now let's look what the price on them is. Now let's just say both of them are $100,000 each. This makes the $30 one the easiest option. Now here's the curveball. They both have growth rates. The $30 one, it's growing 1% per year. The $20 one is growing 20% per year. Now, if both of them are 100,000 apiece, which one are you buying? Now, if we do just some basic math, the $20 printer will actually outperform the $30 printer within just 4 years. So using some of these numbers, we could actually calculate the intrinsic value of these printers. So if we run it through Benjamin Graham's calculation, the $30 printer is actually only worth 90,000 bucks, but the $20 printer, that thing's worth 200,000. So the $30 one is actually going to lose you 10% instantly, but the $20 one is an instant 100% gain. Both of them are the same price, but one brings you less value, the other brings you way more. So if we go back to like the Lamborghini and Civic idea, I mean, I would probably say that Nvidia is probably like the Lamborghini, and I don't know, like Disney is probably the Civic. So in case you haven't realized yet, some stocks are trading way above their intrinsic value, while some stocks are trading at way lower. This is what brought so many legendary investors success, is because they figured out a way to calculate intrinsic value. Then you basically know intrinsic value of a bunch of companies, as long as you actually know their business, like you know that they're not going to go bankrupt or get pushed out of business or whatever it may be. If you figure out a way to calculate intrinsic value, then you can basically just compare all these companies and say, hey, this one is going to make me way more This one, probably not as much. This is how over the years, legendary investors may buy companies that nobody's paying attention to and maybe sell or not even touch companies that everybody's jumping on. So overall, the basics of investing is don't pay attention to those things that everybody's buying. Try to find that thing that a lot of people have missed. Those are probably the ones that'll bring you the most potential return. But anyways, thank you guys for watching. Be sure to give me a recommendation on what kind of video you'd like to see next. And as always, hope to see you in the next one.